journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're back. Our guest today at the break will be Mike Moore of More Analytics. Of More Analytics, to talk to us about the energy complex, because that's been hit really hard these past few weeks, much as he predicted too, by the way. Let's take a look here at the E-mini S&P here, folks. We've been bearish for quite a while. We had this big move up. We had a nice little retracement here. Looked like there was going to be a top here yesterday, folks. Looked really good. It broke 100 handles, and then, of course, it's exploded more to the upside. It's very newsworthy, as they might say, in the trade. Now, I've been doing this for a long time. As you know, my favorite book of all the technical books is Gartley's Harold McKinley Gartley, 1937. The book cost $1,500, but he said on page 222, look for the first ABCD retracement in a bear market, and look for an ABCD in the bull market. And folks, here's what we've got going right now. There's your AB leg, okay, and there's your CD leg. You can see we're not very far away. We're 70 handles away, which we could do that very easily. Now, we could easily get to that. Now, we know that mathematics precedes geometry, so we're probably going to go to that level right here. There's the mathematics. There's the geometry. That's 100 handles difference, folks. That's a huge amount. But the one thing we do is we watch time counts, how many times the market goes up. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. Folks, after 8, it's an outlier event. In other words, there's an 80% chance that in the next 2 days, the market is going to reverse. That's work from Larry Williams that he sold way back in 1978. Paid $10,000 for it when I was at Drexel, and boy, I'll tell you, those numbers that he gave us were really spot on. The number of days up, 3, 4, 5, 6, 7, out to 8, and after 8, it's an outlier event. It could go to 10, 20. The biggest number, I think, is 22 days up and 22 days down. Now, there's and if you're going to sell one, the one you want to be selling would be the Russell, but there's nothing to sell today, folks. This is Friday in an up week. For this thing to really change today would take something short of a miracle. And I mean a big miracle. All right, let's look at a couple others that have been working correctly. Now you can see we had another rally to the 382 in the gold. We said all week long that the chances are we're getting, right, you can see the last rally was a little less than the other one, but if we go and look at the this daily here, this long-term daily, this is probably where we're going, folks. So we had a 382 here, a 382 here. This tells us we're going to go to this level right here. Now, the 61% retracement on this level is 3176. Remember, 317, well, this says 319. Oh, because it's caught the wrong number. Hang on here just a second here. Paloverde's got me whacked here pretty good here. That's it. There you go. Okay, there it is, 3174. That's only down another $60 from where we are right now, and it's dropping $60, $70 a day, so it shouldn't be too hard to make that level right in here on the gold, okay? All right, now we'll get that one out of the way here, and we want to talk about the wheat market, because we flat out missed this one, folks. Let's get this. We had the order in the wrong contract. We were trying to buy the December, and it was the July that really set the pace. And as you can see here, this is now broken sequence, folks. Well, not really. Well, let's just look at it right here. See, we were looking for it to come in right here at 57. It went to this level right here. It didn't quite make this level that we wanted. We've had a very good rally here the last 3 days. You can see the last 3 days rally, but if we look at this from a bearish standpoint, Let's get this up here. There's the rally of the last several days. You can see it, and we haven't put this in. Let's refresh this for today, and you'll see where we are. All we've done so far on this is to make an ABCD. It's an ABC in a bear market. So Gartley said, get ready to sell it. And by golly, there it was. I mean, that's an ABCD. So we still have a chance in the wheat. I know it's slim, but it's still got a chance. People are not going to stop eating pizza, cookies, and bread. They're just not going to do that. All right, now let's move up here to the other one that we were watching real closely, which the December meal is doing quite well. It's up another $3 or $4. Let's get to the one that is not doing well. We're out of it, but here is, this is the cattle, folks. Remember, we sold this cattle up here at 10. It broke down almost $1,000, and we said you had the profit of putting your stop at break even or taking a profit. And some people decided that's what they were going to do. But here's where we are right now over the last several days. We're going to just look at it real quick. You can see the 1.618 expansion, okay? Now, remember, we did this on the daily chart up at that 210 level, see? And we're higher than 210. See, we're higher than that right now. So what we have to do is look at it on a little bit longer time frame. Let's get that shorter time frame. And you can see there's where we're getting ready to get up to is that one. Larry, stop it. These things are so sensitive that they don't always work. So move this around here. Here's where we are over the last few days. What I'm trying to bring to your attention is the 1.618 expansion, which is at 212. And that's where I think that, it's off this one right here, sorry. That's the last high from yesterday. So you measure that from down to there, and there is your 1.618 expansion there at 212. 212.18. So I am going to sell at 212.18 and risk one cent a pound. So it's $400. So that's what I'm looking at. I'm putting it up right in here right now. This morning, on this morning's move, the market backed off just a little bit early this morning, and it's been really strong all day. I firmly believe, NA, I'm wrong some of the times. On this one, we made a nice move on the downside, but the worst that would have happened, just like in the Russell, the worst that's happened is you break even. That's the whole key. But there's the place to sell at 212, even 212.10, something like that, and risking about 80 points or $350, what I'd be doing in cattle here this morning. All right, now we'll come back here and let's take a look at a few stocks. Let's do the bonds first because the bonds are still going down. Here's where we are. See the big move we had up, and it's been coming down in ABCD faction. As you can see, there was our first one up here. Remember, we were saying that would be a pretty good sell. It missed it by a couple of ticks, and then the ABCD missed it by a couple of ticks, and now it's been coming down. There hasn't been a 382, I do believe, but I haven't checked it. Let's just double check from your high here to your low here. No 3. Oh, wow, that was really close. It comes within a couple pips. Nothing yet. We're still going down, folks. So bonds still look weak. Stocks still look strong. All right, we'll be back. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we're going to quick review of coffee. We had the ABCD, this level right here. We went down to the smaller time frame, and you can see there was the first 382. Well, I think it was 13. Yeah, that's it. 8 minutes, just a second. I think that's what it was. There it is. There's where we were. We had the 382 retracement here on Wednesday. We made the ABCD on Thursday. What did we do today? We went up and we made a 382 off of this high right here. There it was, right there. And now we're breaking down. This tells coffee has made a major top, folks. Not that it affects us. I'm just showing you the patterns. These are the same ones that are in Gartley's book. I just don't trade coffee. So we'll get this out of the way, and we'll move on to another one that we want to be watching. We're going to take a look here at Tesla because we're having some movement to the upside, not unexpected, as you can see here, because we had this 382 here, and we're ready to pop through that. You can see we've been here for 1, 2, 3, 4, 5 days. That means we're going to go higher. Now, that fits in with what I think is an ABCD pattern and some of these other things, but we'll do one at a time and not worry about it. Okay, the next one we've already covered the Treasury bonds. We need to NVIDIA. There it is, NVIDIA. Yeah, get it up here, right here, doing the same thing. You can see here in NVIDIA, we have an ABCD coming up here. We drew this a couple days ago, and it was up sharply. I guess it's still up, but still, considering what the NASDAQ is doing, this is nothing. I mean, we still could go to 123, and it's still quite bearish. So that's NVIDIA. Okay. All right, now we'll move over here to the next one. Let's get over here. We covered that. All right, let's take a little break here with the crude oil, this because Mike Moore will be covering this for us on the crude. There's where we were the last between yesterday and today. If you like 382s, folks, and I do, if you just go back and look at the high that we made way back here on the 17th, and look at that today, folks, right there at 59.66. We pointed that out in the video that we sent last night. You can see there's a little 3-drive pattern right here. And now we've backed off a little bit. So we'll let Mike cover this stuff. But Mike, I can't understand how gasoline can still be $3 a gallon here when we've got crude oil at $54. I mean, look at this, folks. Come on. Look at this thing. This thing's been hammered since January. We've dropped to 40%. And you'd think, cool, gasoline prices would drop that much, but they're not dropping. So we'll have to ask Mike, to take a look at gasoline and also the heating oil. Sorry, folks, I'm getting a little choked up here because of when you get to 96 degrees like we're going to have today, the Palo Verdes go crazy, and I had to take the trash out today. Oh, on a human interest story, take a look at this, folks. You see this little bottle right here? This little Coca-Cola bottle? Do you know that this bottle was, and has never been changed all the 100 years? They use different bottles, but for the real Coca-Cola, this is it right here. This Coca-Cola bottle was designed by a man in Terre Haute, Indiana, from Holman Rose University Engineering School, and it stood for, I think he got a tenth of a penny for each bottle sold. This is a glass bottle. It comes out of Sonora, Mexico, and it's made with cane sugar. And believe me, folks, I can have 4 ounces of this every 3 days. So that's my real, and boy, does it taste differently. Oh my God, it's the real difference. Cane sugar is metabolized by the body a lot differently than the others from what they tell us. So we'll see. Anyway, that's the British pound. It's going lower. You can see here, we thought that was going to be happening. Now let's take a look here at the euro. Also been going down quite a bit, and you can see here we're still going down. We had a little bit of a pop this morning with all the news, but let's review the 382. Okay, we had the 382 right here. We had the 382 yesterday. Okay, this was the main 382. Remember, we broke below that, and we popped above it, and then we had the rally back. Well, let's just see what that rally did. Okay, now remember, this is in front of all this news. I haven't checked this yet, folks, so I could be wrong, but there was our high right back here. And look at today's high, exactly at the 382. So that's what looks like we're still heading down here and there. That means the dollar has a chance. Maybe that's why gold is weakening up a bit, but we have to do one thing at a time as we're watching these things unfold here. Now let's see if we've got any left. We covered the meal. Let's get up here with the December meal because we sure like that. It hasn't gone very much, but it's still rallied. We liked it at that 302 level. We hit a high of 306 today. But that's all we've gotten so far. I'm still holding my hopes out for the wheat, but it's going to be a little difficult for it to get there. But because it hit that 382 today, it still has a pretty good chance. So we have a question here about Apple. Let's get Mr. Appel up here. Oh, boy. Wow. Well, Apple ain't acting too good, is it? Wow. Okay, let's refresh this and make sure this is, this is not acting good for Apple. I'm surprised that, you still got the Dow up 400 points, so that's a big deal. Look at the Apple down quite a bit. There must be some bad news on Apple. I don't know if the earnings was out or whatever, but that doesn't look too good, folks. And Apple's one of the big stocks to be watching. We have one other stock to look at. Let's get this up here, and that's Goldman Sachs. That should be a big one today because of the Dow being up. It's the big... Yeah, and of course it is. There's where your reason why you're up so much in the Dow Jones. You got Goldman Sachs still going higher. Okay, now it's from the high. See, we gapped up to the 50%, then it backed off, and now it looks like it's heading up to here, the 61% retracement. So that's part of the reasons for the strength in the Dow. And let's check out one more, and that is IBM, because it's getting more news than it's had in a long time. And you can see it's also is up on the day. Another reason why the Dow is going to be strong. See, triple-digit stocks, there's 20 of them in the Dow. They control the Dow. The ones that are under $100, they don't affect the Dow at all. So this tells us that we've got a possibility here in Big Blue. Well, nobody calls it that anymore, but that's what it used to be. There it is right there. We could get up another 16 points in the IBM. All right, now let's take a look at this. Hold on one second. Let's take a look at that live cattle, because I don't know if I haven't seen anything I haven't heard a beeper go off, so hold on just a second here. Well, I have Mike Moore coming up here in just a minute, and there's where we are here. Get this up here, see how close we are to it. Oh, we haven't quite made it. How high did we get? Boy, we came real close, didn't we? Oh, man, we came within 20 cents of the high, so keep your ordering work. Oh. keep your order working at 212 with a stop at 212.90 here in the cattle. All right. Okay, that's a big one too. We'll see if that's going to be a big deal. All right, we're going to take a little break now. Lo, we got to check the clock on the wall for our good friend Mr. Christopher there at the TFNN place. See how much time we got left. 38 seconds. Boy, that's a lifetime in his Bailey hook. All right, I want to look at one other, folks, the NASDAQ, because the NASDAQ is just above the 38618 as of now. So there it is. Okay, we'll be right back. Mike?
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Well, we've got a good old friend back. Mike Moore of Moore Analytics is with us. Mike, how you doing, buddy?
Good. How you doing, Larry? Thanks for having me on today.
Appreciate it. Hey, listen, love having you on. We really would like to have some information on the energy complex, including natural gas. Those are the main ones because, we've seen gasoline prices, or not gasoline, but crude oil prices drop about 35-40% here, much as you predicted, by the way. But do we have a bottom near here, or what are we looking at?
Well, let's take a look. First of all, I'm sorry to the audience that I have a collared shirt on today. I just had an exercise, but
just don't let that happen. Don't let that happen again, Michael. You'll have to be disembarked. That's the only thing I have in my own. I don't have any collared shirts.
Little unprofessional, but
no, you're doing fine, buddy. We work at home. We do whatever we like.
If anybody wants to get in touch with me, this is the way you can get in touch. Just go to moreanalytics.com. All right, let's jump into the crude. So the crude here, we've been bearish overall from 119.15 per barrel. A lot of other bearish calls in here. More recently, it's been a little while since we've been on. I said I noted we have broken below a general significant level in the 64.78 to 50 area, which warns of $7 minimum, $12.50 plus maximum to the downside. So we're $9.83 in there before short covering off the low. That's currently on hold. Then more recently, right over here, the trade below 63.11 and 62.11, and then that got a short up in here and in here. Then we saw pressure down there, and the break back above this line saw some short covering. So we haven't hit a stop back down below the line. If we hit that stop back down below the line, that'll take bearish calls off hold, and that's going to come in at 58.23 minus 1.3 per hour starting at 1 o'clock p.m. Eastern Standard Time. If we were to rally up and take that formation out above right here, which is going to come in at 61.05 minus 2 per hour starting at 1 o'clock p.m. Eastern Standard Time, that would project this upward at least $5. And likewise, that would be a good fade if we were to break above there and fell back down through it. Let me just take a look at one thing real quick on these daily continuation charts, which I don't normally go on in here. Actually, this is kind of an interesting chart. This is a daily continuation chart, meaning that this is many contracts linked together. But in general, the beginning of the Biden administration, I think, was in here. Saw a real strong rally out of that. But this has been consolidating here for quite a while, and you can see that we've broken down below very significant levels in here in just the past couple of months. So I do not think the downside is done. That being said, we came off and we held this key exhaustion level here almost exactly at 55.16 with a 55.12 low. Should we take that out, where that level goes down to 53.71? If we should take that whole thing out, we might drop further down to 44.24. All right, let me take a look at the RBOB here. Before taking a look at the RBOB, actually, let's just jump in because you had a question about the cracks, Larry.
Yeah.
For those of you who don't know what a crack is a spread between the crude oil and the underlying product, because when crude oil goes through a process called a cracker machine, and that breaks out of it amongst a number of other products. The main products are unleaded gasoline and heating oil. So when you're talking about trading a spread, you're talking about between the underlying crude and one of its products. It's called a crack spread. Okay. So this has been the RBOB crack spread, which has been rallying here strongly for quite a while. This actually became bullish. On my analysis, I have a page right in here called Seasonal Trends. These are trends that have been happening over the past 10 years with consistency. And you can see here, this had the July crack as a buy. And when you're buying a crack, you're buying the product and you're selling the crude. So this was a buy from 420 into 515. And, oops, sorry about that. Bear with me. And 420 was right in here, and you can just see that nice strength out of that. Now, nonetheless, that means that it's gone from 23.88 up to, let's say, 26.44 right now. What does that mean to the viewers? That's the equivalent of a $3 crude move in that direction, meaning that the unleaded gasoline has been staying strong relative to the price of crude. Does that make sense?
Yeah, sure does.
Okay. And I just coincidentally happen to be bullish in here also for other technical reasons, but that's a couple of reasons there. Now you could draw some lines in here, and obviously if it takes one of those out, this thing might dump, but currently it's still bullish. All right, back to the RBOB. So the RBOB, or unleaded gasoline, again, for those of you not used to the energies, RBOB is another word for the unleaded gasoline, to keep it a crude equivalent there. Okay. In the RBOB, now the last time we talked, I'd said that we'd made a solid trade above 196.64, which warned a solid strength for weeks. So we wound up seeing 15.77 cents of that. I guess you can go back to the previous time I was on here. I think I showed this chart on our last show. We'd broken below, but when we got back above it, I said it was poised for a higher trade for weeks. This happens to be a daily continuation chart, so it rallied for a couple of weeks from the 196.80. Well, what did I say here? 196.64. We rallied for 15.77 cents. Now we've rolled back over and just bounced off it. If we were to fall back down through that line solidly, that would take higher time frame bear calls all hold. That line is going to comes in at 197.87 and moves up 8 ticks per day. Is that right? Yeah, per day. Okay, back to where we were. Sorry for the jumping around there. Okay.
Mike, we got to take a break to pay some bills. Stay with us, buddy. We got plenty of time.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with more Mike, more analytics. Sorry, Mike, I'm working on about one cylinder, but I'm doing okay. Please continue, my friend.
That was me earlier in the week, so I feel you. So in the RBOB, just most recently, though, the trade below 208.38 plus 8 ticks per hour brought in 10 cents of pressure. That was the failure below this line right here. We saw that 10 cents, and then wound up holding this line before bouncing. If we take this line out, that's going to warrant continued pressure. That's going to come in at 198.48. minus 2 per hour starting at 1 o'clock p.m. Eastern Standard Time. However, I would caution that once we take this low out, we're likely going to be in the last stretch of this move down, and you're going to have this exhaustion level right below here to contend with at 197.56 to 196.26, and then a lower one down here at 193.53 to 192.22. Okay. One other thing, let me just double check here. All right, and the heating oil, we had left a moderate bearish reversal above 4 days ago, excuse me. And this was a bit, sorry, excuse me for a minute here. Getting all over the place here. All right, we had broken below this formation right here, which projected this lower, but it really crept up underneath this and tested underneath it for about 4 days before it finally rolled over. So I kind of took that out of the analysis because we were way above entrance rate, but we never did violate the line on the upside. We rolled over, and then we took out this lower line and broke back above it, which brought in short-term bullishness. So we sort of rallied up into here, and now we've sort of rolled over into this neutral zone right here. If we were to take this line out on the downside decently, which is going to come in at 196.94 minus 3 per hour starting at 1 o'clock p.m., that would renew bearishness. But again, similar to the RBOB, we would likely be in the last stretch of this move down here with exhaustion levels at 194.48 and lower down in here. Also, if we were to break below this low and settle back above it, that might warn of an early termination from it. And in the Brent, we left a moderate bearish reversal above on the 29th of April. So we've been seeing pressure from that the past couple of days. We also broke below a formation in there. The trade below 65.91, which is this line right here. I said projected this downward $1.90 minimum, $3.20 cents plus maximum. We detained 661 of that down into here before bouncing a bit. And then, let's see here. Decent trade above this formation right here, which is going to come in at 63.77 minus 2.3 per hour starting at 6 o'clock p.m. Sunday. Excuse me, starting at 1 o'clock p.m. today. That would project this upward at least $5. If we break above there decently and back down through it decently, look for decent pressure to come in. And the gas oil, we also left a moderate bearish reversal above 4 days ago. We've been seeing the pressure from that. Tuesday, we left a medium bearish reversal above. The trade below 624.80 had brought in 52.05 of pressure before holding possible exhaustion down here. So that was a pressure below this line. And then we held this final exhaustion at 574.10 with a 572.75 low, and then bounced up to 593. If we were to take this out and settle below there, we're probably going to dump down here into 558.50. And to maintain a gap higher in there next week would leave a minor bearish bullish reversal below. And again, to a different page talking about the cracks, I've been bullish this RBOB crack over the past number of days, and the heating oil crack turned a couple days ago, and you've been seeing the effects of that. And that's where you get an extreme move like this. This is a different spread. This is just a spread between the RBOB and the heat, so this is considered a product spread because it's a spread between the products. But understanding the differential in these spreads is huge because you can just add a large amount of added profitability. You can see here just understanding the spread and which to be long or which to be short at any given time resulted in $3 worth of movement in the past number of days. And like I said, that RBOB, similar. So,
Mike,
okay,
I've got a question. Now, when you're doing the spreads, the spread margins got to be a fraction of the regular margins, aren't they?
Maybe a little bit less. The problem is the cracks are a little bit thinner, so you got a liquidity issue there. But if you look right, like currently, the crude oil, your average volatility in here is $1.66. Your average volatility in the RBOB, let's say, is 386. So if you were to turn that in, if you were able to turn that into dollars, the RBOB, you would go 386 times 0.42, and that would be the equivalent of $1.62 in crude dollars. So it's about the same. But if you were to go and look at the crack itself and say, okay, what is the volatility on the crack? It would be 50 ticks. So it would be muted to a good degree.
Okay.
So you want to take a look at the S&P?
Yes, sir. S&P and also the gold. Yeah.
Okay. We got time, or you want to jump into a commercial?
No, we got time. We got a little break, but You're going to have the last couple of minutes of the show anyway. So just keep going. Okay.
So the S&P 500. If you've been watching this show for a while, I've been bullish since the 3502 low. You saw 2,676.75 points into a full-fledged bull trend. And now we've rolled over into a bearish correction / trend against it. But time-wise, I said an exhaustion level is not really due to hold until December of 2025. So we may see some pretty wild swings. We've seen a number of, we've been bearish from 60, 84.25. You saw 1,252.25 of pressure to the downside. A number of other bearish calls in there. Those are all on hold. And then we got bullish on the trade above 5409.25, and we'd seen 273.25 to the upside. That was a break above this line right here. We pulled right down, just missed the stop, and we've been rallying since. Then we broke above this formation right here, and that formation came in at 55.94.50. and we're starting to see strength.
Mike, we got to pay a few bills. Stay tuned. We got another 3-minute segment coming, so we'll be right back with more analytics, folks. Mike Moore.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back with Mike Moore of More Analytics. Please continue, Mike. Okay,
so anyway, we're back in the S&P. So we got bullish above 5409.25 and more recently above 5594.50. So we're still bullish. Breaking above this formation suggests we're probably going to head up here to 5762.33. Now, if this was to roll over and take out this formation on the downside, that would warrant a renewed pressure. That's going to come in at 5597.98 plus 10 per hour starting at 6 o'clock p.m. Sunday. If we fail below this formation right here, which is going to come in at 5397.47 plus 115 per hour starting at 6 o'clock, that will warrant a decent pressure to the tune of at least 300 points to the downside. Okay, now on to the gold.
Yes,
gold,
sir.
We left take this out of here. Nope, sorry. I don't know why it does this sometimes. On March 3rd, we left the failure below 34.8390 has brought in 213.1 of pressure. That was the break back below this formation right here. We've come off, drifted sideways, broke below another formation right in here. And that was the break below 32.9470. I said projects this downward $78 plus. We've attained 85.3 of that so far down into here. If we were to trade back above this line decently, that would warrant decent strength. That's going to come in at 33.0240 plus $2 per barrel.
Hey, Mike, thanks for joining us, buddy. We're going to have you on again in exactly 2 weeks. Be sure to remind me, okay?
All right, buddy, you got it.
Want to bet you every 2 weeks. Mike Moore, More Analytics, folks. Have a wonderful weekend, and may God bless.